Good morning, good afternoon, good evening, guys, wherever you are in this beautiful world and whatever time you're watching this video. Welcome back to the channel. Normally, I've got another chart prepared for you, which we've been opening the videos up with on the weekly time frame, which we'll address later in this video. But today, I wanted to talk you through to some historical data regarding length and retracement of previous bear markets, right? So yeah, let's just jump straight into the content. This is the 2013 bull market, which I did not attend because I wasn't interested in Bitcoin at that time. But the Bitcoin bull market or blow off top, the highest point was at November 30th, right here, and we'll take the measuring tool. I have to draw it to the bottom right here, which was a that didn't go well. Which was a 410 day period and the price retracement of 85% on the 2013 bull market. So let's just go towards the 2017 one, and I have to lock the chart a little bit more in order to go to the 2017 bull market. We had a highest Bitcoin price on December 17th, and the low was 365 days and 84%, so 409 and 365 and 85 and 84%. Let's just keep that in mind and look at where we're at right now. If we take the highest point right here on November 10th, need to be a little bit high. Oh, a little bit higher there, yeah. And we're at a low now. So as you can see that this is 77%, but it's already in 377 days. So that's a longer period before we reach the bottom than the previous bull market, but still shorter than the first bear market. I said, yeah. So if we middle somewhere, then you can arguably say that we are close or at least near the bottom time-wise. But percentage-wise, not so much. We had 85 and 84, and if we draw back the price of Bitcoin and go to the 80, let's say 84, which is the average, that will take us to the 10,800-ish level. And yeah, that's what all crypto Twitter is asking for, I guess. I have to say that I wouldn't mind a 10K Bitcoin, because that will only get me more cheap Bitcoin and load up my positions for the next bull run, which I think will come. But let me know what you think in the comments. Is Bitcoin dead? The normal bottom signal in the previous bear market was when everyone pronounced Bitcoin dead, which was where the bottom was found, and then we had a nice opportunity to build our long positions or our holding positions for a couple of months to a year, and then eventually ride the wave up, right? So yeah, let me know what you think in the comments if you believe that the 10.8k is something that we need to look for. I'll show you some charts where I can say that it is likely from a technical standpoint, and let's just go there right away, because if you've been in our Discord channel as well, then um, you can see that we've had some different charts. You can look at this as a horizontal triangle, and you can also look at this of a in a bear flag, right? So this triangle it is a triangle for sure, and especially in the 4 hour. But one could argue that this horizontal triangle, which has a technical target to the downside of 14.6k. If we look at this from a bear flag standpoint, like this, right, then the technical target would be somewhere around the 11k area, which is very close to the 85% downfall that we just calculated, right? So it isn't necessarily a bad thing to look at this from a bear flag perspective, right? So if we look at it time wise, then there's nothing particularly wrong with nearing the end of the bear market, but percentage wise, we still, if we take an average of those two, if those bear markets were an indicator, and we can take that for granted, then we quite probably have a little retracement more to go. But that's not enough for me to go in a short. Yeah, we've seen momentum coming up. I've talked about this last week as well, but yeah, we had a very red candle yesterday, and it seemed like we were dropping again and creating some more red volume again, but that's not the case yet. The half of the day is gone, so it still could be, of course, and yeah, we'll just have to see. So it's not necessarily that I think the bear flag is out of the picture, right? So it could very possibly be. It is a very interesting place to maybe set up some buying orders, of course, if you haven't already, because yeah, it's not out of the books yet. So yeah, just be careful out there. If if we do so, then we will surpass this technical line in the sand that we've talked about for weeks. Also, this the 13.5, because if we look at it from a previous bull market, that was the close on the on the monthly. It was, yeah, on the monthly, right? So that that was this close right here, yeah. So the 13.5 will be, I think, will be a very tough nut to crack for the bears, because yeah, if we look at it from the monthly, you can see momentum turning up. On the weekly, it's going down, and on the daily, it's going up. So it's yeah, basically a 50-50, right? So we cannot predict which way we're going, but yeah. Two time frame indicators say that we can go up for a little, and the weekly is looking down. If we look at it from the monthly perspective, then yeah, it would be great, of course, to see something like this, and then maybe some sideways action until we can go, for instance, towards March or September, I don't know, and have some create some green values over there. So yeah, that would be great, but yeah, we'll have to just wait and see, of course. So there is some bearish news, there is some bullish news. If we look at the 4 hourly time frame, which is what we have this horizontal triangle or this bear flag, whatever. It looked like we were going to break up, but yeah, bears didn't want us to, and because there was no extraordinary news or something going on, and now you can see that this EMA ribbon is yeah, holding us down right now on the 4 hourly. Let's look at the smaller time frames if we can see some M's or W's. M's and W's are very indicative for yeah, for momentum trading. You can see a W was forming right here, but it got rejected. If it doesn't break the neckline, then it will be invalidated, which it was. And I'm not necessarily seeing, and yeah, you can maybe look at this from a inverse head and shoulders pattern, but I don't like that so much because that normally should be something like this with a higher shoulder, a higher right shoulder than the left shoulder, and that's not the case. So yeah, indicators on the lower time frame don't show much. They're not any patterns that I can show you right now that are interesting to trade on, scalp trade. I'm not doing that now. I will do that in the next bull market, but yeah, if you're looking to trade on the lower time frames, I cannot see anything, and on the higher time frames like the daily and the weekly and the monthly, yeah, there's a 50-50 split between going long or going short, and that's why I stand on the sidelines. I have my buy order set up at the 13.5, and I've got buy orders set up at the 11.2 because I don't want to miss that possible 10.8, 11. Maybe it doesn't get reach the target, and it and you reach somewhere like here, and then it goes up. So then the target, if you're having a target buy order set up at 11, and 11.2 is where the people start buying again, then yeah, then you'll miss out on it. So um, I generally put take profits or set up buy orders a little before the target, because just in case you don't want to miss them. Let's just look at the DXY, which was falling, which was where Bitcoin was. Let me put it in the same time frame, which was where Bitcoin was a little yeah, going down as well, because that's not the way it went. But 2 days ago, yeah, we had a little green color for Bitcoin, which, oh yeah, which also made it almost look like we were going out to break out of it and look to the upside target. But thankfully, you guys on the Discord checked me and asked me, and that's where I could let you know that we didn't close the 4 hour candle above the line, which was right here, and which was right here, I guess. And you can see after that we dropped, or this, it was this one, I guess. We dropped down, and yeah, after that we saw the EMA ribbon closing us off. So both for bulls and bears, there's something to say, right? Time-wise, we are, based on historical data, time-wise, we are nearing an end of the bear market. Percentage-wise, we don't. One could argue if we go from 85 to 84. Now, if we continue, if trends continue, then you could argue that an 83% move could be the case, but a 77% case, which it was now, is not necessarily what I think is the end of the bull market, right? So of the bear market. So yeah, be careful out there, especially when you leverage trade, and Yeah, let's see what if historical data can give us any points to see if we hit a bottom yet or not. So, well, that's it for today, guys. I hope you enjoyed the video. If you did, leave a thumbs up for the algorithm, and yeah, that's it for today. Bye.